Good evening. Today we are going to discuss the monetary policy decision made by the monetary policy board and the rationale behind the decision. The monetary policy board decided to further ease the monetary policy stance by reducing policy interest rate of overnight policy rate by 25 basis points to 7.75. Also, it was decided to keep the margin to form the standing deposit rates and standing lending rates at 50 basis points plus and minus. With these, standing deposit rates will be reduced to 7.25 and standing lending rates will be reduced to 8.25. SRR will remain unchanged. The board was of the view that this measured easing of monetary policy stance will support steering inflation toward the targeted level of 5% amidst global uncertainties and current subdued inflationary pressures. The inflation development suggests that, as expected, deflationary conditions have begun to ease since March 2025, as predicted earlier. And we expect that trend to continue in the coming months as well, and inflation to reach the positive level from early Q3 2025. The latest projection show signs of a more gradual pickup in inflation in the near term than previously anticipated. Core inflation is expected to adjust gradually in the coming months to the level that is consistent with the headline inflation target of 5%. And we see that inflation expectations are also aligning with the inflation target in the upcoming periods. The recent economic activities indicate that sustained progress continues in domestic economic activity. The PMI indices are well above the benchmark of 50, though there are some seasonal differences in some months. And the index of industrial production has improved notably in March. And also, thus far during the year, this has been well above the levels prevailed in 2024 and 2023. The global uncertainties, which could have an implications on Sri Lanka, have escalated from the previous monetary policy review. Of the market interest rates, we see that market interest rates have stabilized at lower levels, implying that there has been a complete pass-through of policy easing happened previously. All interest rates have adjusted downward, and in the right-hand chart, we are showing the changes in the policy interest rates from time to time, starting from June 2023, and it's passed through to overall lending, weighted average lending rate. And we could see that there has been a gradual adjustment continuously since June 2023, and that adjustment has slowed in the recent time, which is in line with the already adjusted policy interest rates. However, with the recent policy easing, the board expects that there will be further downward adjustment on the lending rates, so that will support the economic activity. On the credit flows to the private sector, we see continuous momentum, and also we see that credit is flowing to all economic sectors of the economy. The first chart shows the credit expansion, and during the first quarter of this year, we have seen over 274 billion credit expansion, and in March, we have seen a 14% year-on-year growth. And the second chart shows the sectoral composition of credit, and we could see that credit has flown to all major production sectors as well as the personal loan category. And we see all these share fairly good share in the overall credit. And we expect this credit expansion to continue throughout the year with further support from the latest easing. The current account was estimated to be a notable surplus during the first quarter of 2025, and we see a substantial surplus on the services account of the balance of payment as well. On the merchandise trade account, we see a continuous expansion in import expenditures as predicted earlier. while export earnings also grow, even though we see some seasonal differences. With this, we see the current account deficit has, the trade deficit has widened to 1.5 billion during the first quarter of 2025 compared to 1.2 billion recorded around the same time last year. We see continuous improvement in tourism earnings as well as workers' remittances, which is supporting the external current account surplus. During first 4 months of the year, we have seen around 1.4 billion levels of tourism earnings estimated, and from the workers' remittances, we have received around 2.5 billion during the first 4 months. The early indicators suggest that remittances momentum continues. The continued net forex purchases by the central bank has helped to strengthen the official reserves amidst debt servicing as well as other forex outflows. As of end of April, the GOR has been estimated at 6.3 billion provisionally, and which was supported by 0.65 billion purchases thus far during the year by the central bank. The Sri Lanka rupee recorded some depreciation against the US dollar during the year, following 2 years of annual appreciation. The board will carefully assess incoming data on the domestic and global front and take measures as appropriately to ensure that inflation stabilizes around the targeted level of 5% while supporting economy to reach its potential. Thank you.